Hello traders and welcome back to the Forex Geek. In today's video we are going to break down a powerful candlestick pattern that can signal a major shift in market momentum. We are talking about the bullish counter-attack pattern, and this pattern is a key reversal signal that often appears at the end of a downtrend, providing you with an opportunity to capitalize on potential bullish moves. So by the end of this video, you understand how to identify this pattern, the psychology behind it, and how to incorporate it into your trading strategy with precision. So stay tuned to the end of this video to learn how this pattern could help you spot reversal opportunities and improve your trade entries. So without wasting your time, let's get started. So first, let's talk about the pattern basics, the pattern overview. So the bullish counter-attack pattern is a powerful reversal signal that often appears at the end of a downtrend. This pattern consists of two key candles that work together to indicate a potential shift from bearish to bullish momentum. So the first candle in this pattern, as you can see on my screen, this is the first candle, actually, not this is just to show that we are in a downtrend or a pullback at the moment, and this is actually the first candle, and this is the second candle, which is the confirmation candle. And the first candle in this pattern is a long bearish candle reflecting strong selling pressure in the market. So this candle typically has a large real body, showing that sellers were in control for most of the trading session. And the second candle is where the counter attack occurs. So this candle opens lower than the previous candle. This candle opens lower than the previous candle's close, actually, initially suggesting continued bearish sentiment. It actually gapped. There was a gap between it. Let's say this is where this first candle closed. This is where the second candle actually opened here. And there was a gap here initially, and it suggested that there was continued bearish sentiment. However, buyers stepped in forcefully, pushing the price back up to close near or at the same level as the previous candle's close. So that's why they call it the counter attack. So this formation is significant because it demonstrates a rapid shift in market sentiment. So despite the initial bearish pressure, bulls managed to regain control and erase most of all the previous day's losses. So this sudden reversal of fortune often signals that the downtrend may be losing steam and a bullish reversal could be imminent. So for the pattern to be valid, it must occur within a clear downtrend or pullback, and this context is crucial as it highlights the potential for a major trend reversal rather than just a minor price fluctuation. So that is your bullish counter-attack candlestick pattern, as we've explained, and I'm just going to hop on the charts to show you examples of it. So this is it right here, and you can see we have this large red candle showing that there was enough selling pressure or selling momentum in the market pushing price downwards, and then we had this open below and price actually turned the tides, and buyers stepped in and pushed price back upwards. I'm just gonna include the volume to help us confirm our trades. So this is the volume below, and you can see despite the increasing bearish volume around this area where price was initially bearish, we can see the buyers stepping in with enough volume around this area where we had the bullish counter attack, and the price closed almost or very close to the first candle, which is the bearish candle, the first candle's close, showing that buyers are now in control. So a popular trading strategy or entry pattern should be to wait for the pattern confirmation before entering a trade. So you look for a bullish candle following the counterattack pattern, closing above the high of the second candle, and this confirmation adds an extra layer of security to your trade. So it will be wise to enter at this open of this trade. You can see the candle closing above the high of the second candle. Like I said, remember the setup is to wait for the pattern confirmation before entering a trade. You should look for a bullish candle following this counter attack pattern, and this bullish candle should close above the high of the second candle, and this confirmation adds an extra layer of security to your trade. It should close above the high or maybe very close to it. This one closed just very close to it, and the next candle, actually we had a gap, had a very strong gap, and you see the volume so high, so we could just look to enter a trade right there with our stop loss placement. Should be below this the low of the second candle of the pattern. So this level represents the point at which the pattern would be invalidated. So for additional protection, consider using a time-based stop, exiting the trade if the expected move doesn't materialize within a specific time frame. So your take profits could be at the nearest resistance level, or could be the previous swing high or key Fibonacci retracement level, or you could just target 1:1 or 1:2 or 1:3, targeting this previous resistance level here, or we could target this one here, or yeah, and we were able to reach there. Actually, price got very close to our stop loss, but we are still in the trade, and you could keep targeting as high. If you're a swing trader, you could keep targeting all your resistance levels, and all of this was based off this reversal here, which the bullish counterattack pattern gave us. And you can see another confirmation we had here. So we were bearish, and we're bearish right here, and price opened below, but we went back up to close. We even closed very close to the middle of the first candle, showing that buyers are now in control, and this corresponds with volume, and it means that we should be looking for buying opportunities. You can see the next candle actually closed way above all the candles right here, and above those resistance, and we could be looking to enter buy positions here with your stop loss just below the bullish counter attack pattern, and just take profit at resistance levels like this one or this one, or anyway you choose actually. Yeah, so and we could maintain this buy position from around May, and also we had a re-entry here in June, and that's how we could get these swing trades. So let's see another perfect example right here. This is another one. You see this selling pressure, you see the gap even, and you see the volume. There's enough selling pressure in this bearish candles. Then we have the bullish candle close just very close to the previous candle's close right here, and the next candle closes above the bullish counter attack candlestick pattern, and we could be looking to enter here with our stop loss below that candlestick pattern and take profit at we could look to fill in this gap, or we could look to take profit at the resistance level. And we had this price give us this gap and we hit our take profit, or you could set your take profit at the swing high right there, and we had another major swing trade. All of this was bettered from from spotting this reversal pattern, this bullish counter attack pattern. So it's very important you get familiar with all these candlestick patterns, as they are very useful in your trades, spotting high probability trades. And you can see this area, it coincides with the 61.8% ratio of the Fibonacci, and that was an added confluence which we could use in our trading. So you could also consider using moving averages or the RSI or MACD to validate your trades. So now we're going to talk about common mistakes to avoid in trading the bullish counter-attack pattern. So when trading bullish counter-attack pattern, it's crucial to be aware of common pitfalls that can impact your success. Here are some key mistakes to avoid. The first one is ignoring market context. So one of the biggest errors in trading the pattern in isolation. So without considering the broader market trend, is one of the biggest errors you can make with trading the pattern without considering the broader market trend. So the bullish counterattack is most effective when it aligns with the overall market direction. Another mistake is entering too early. Rushing into your trade without waiting for confirmation can lead to premature entries. So always wait for bullish candle following the pattern to close above the high of the second candle before entering. This was actually a bearish candle, but we had the close above that high, and the next candle was also a bullish candle closing above that candlestick pattern entirely. So that was a nice confirmation. And also another mistake is overlooking volume. Failure to consider trading volume can lead to false signals. So look for increased volume on the bullish candle to confirm the strength of the reversal. So that is it. Alright traders, we've come to the end of this video. By now you should have a solid understanding of the bullish counter-attack pattern, how to identify it, and how to use it in your trading strategy. So remember, combining this pattern with proper risk management and other technical indicators can improve your chances of success in the Forex market. And this is another example I was able to catch here. So this aligns with this support level here, first of all, and also this aligns with the, see if it aligns with the Fibonacci, aligns just with the 38.2% Fibonacci level. So let's look for the volume, if the volume also aligns with it, and you can see these bullish candles showing the buyers are now getting control. You can see the increasing volume also. So this is a valid bullish counter attack candlestick pattern. And that was how we were able to capitalize on this and push price upwards after that. So if you found this video helpful, make sure to like the video, subscribe to the channel, and turn on the notification bell so you don't miss any future updates. Thanks for watching, and see you in the next video. Happy trading.